Welcome to On the Chain.
That people have is, why would the Fed pay thousands of dollars later when XRP is under $1 now? And I think that's an interesting place to start because it puts us like right into the conversation.
Yep. Well, it's an excellent question. And you got to kind of unpack the whole deal, what was behind, making a proposal to the Fed at that time. I'll try to encapsulate that quickly. When the lawsuit was filed and Chairman Clayton left the next day, there was immediate, kind of red flags. What's going on here? It was super weird. You had a lot of other, the enforcement attorneys were leaving, and the disclosures we started to have over that first part of 2021 really were looking curious to someone like myself who had practiced securities law, was observing this lawsuit, thought that the case, we had precedent preceding the case that said XRP was not a security. So the whole thing seemed super weird. And as the SEC continued to kind of engage in delay tactics, we became very concerned that we would not be able to get justice out of the court system. Okay. And so it's when you start to think about it from that perspective, we became very concerned that ultimately the federal government would try to nationalize or take the XRP or take control of the XRP ledger in some manner. So we wanted to have a valuation of XRP on the record in case something like that occurred in the future. So we initially came up with terms. It's basically, I don't know if you guys have had an opportunity to read the term sheet, but it's set up in the structure just like a public to public M&A transaction is set up, where instead of having a transfer agent in our transaction, we have a liquidating agent. Okay, that was going to be one of the big banks, a big trust company. Maybe PolySign, Standard Chartered, JP Morgan, someone like that would stand in. And what happens in a public merger deal is once the deal's announced, the transfer agent then takes in the securities, and when they receive it, it's converted in the merger into the right to receive the consideration in the transaction, right? So we had the liquidating agent basically sitting in the same function of as the XRP for the people that wanted to tender into the deal, to the extent they would turn it in, that would become the right to receive the consideration. It was around that time, I'd say we worked on it, the terms for a couple of weeks, and we knew that it didn't really matter what anybody at Valhil had to say about the value or what the consideration should be. We saw ourselves standing in the shoes of a reasonably prudent XRP token holder. So we basically formed, we basically formed a special committee. Not unlike if you were in a public company, you would go to your board, maybe some of the people in the board are interested in the transaction. You have to form some subset of the board. We call that a special committee. So what we formed is a confidential committee of about 20 professionals. These were lawyers. We have a forensic accountant. We had James Rule was on there. But we had a bunch of different people representing a bunch of different backgrounds, all professional people, but all also XRP token holders. And we basically went through a valuation process with them. We vetted the terms with them, and ended up making a lot of changes. There were, there were things we had. The biggest change we made was our approach. We wanted to do this in a public bear hug type process. And for those of your listeners aren't familiar with a bear hug, it's kind of what Elon Musk did to Twitter, right? He kind of brought it back. This used to happen in the 80s and the takeover wave all the time that a person would make an offer. They would call the CEO of the company, the target company, and say, we think we should buy your company for X dollars per share. And effectively, once they got off the phone, once the person say, screw you, I'm not selling or whatever, they would then release a letter that was effectively to the management and let the world know that they'd made this offer. So the matter is then kind of tried in the court of public opinion about whether the deal should happen or not. And that was the approach we wanted to take initially. There were members of the confidential committee that thought that would be not prudent, that it would create, unreasonable stress in a deal that might be able to get done privately. So we ultimately we agreed to take the path that the members of the confidential committee suggested. The value, there's a lot in the value. First of all, there's 4 elements of consideration in the proposed transaction. Only one of them is kind of a price per token. There's also there's these the ability to retain your airdrop rights, and we called it an airdrop residual right, which we would basically fork somehow the XRPL into those rights would be retokenized into another type of a token that those tendering shareholder or token holders would get to keep. There was a debt forgiveness for the participants, kind of all debt, and there was a tax holiday that applied to each token holder and their descendants. The reason we did that, those elements of the consideration, is because we viewed the federal government in being in the situation that has since that time. We initially proposed the transaction in September of 2021. We had a follow-up in October, late October. But at that time, we already were convinced that the world was going to look like what it looks today, and that it was going to start breaking down into currency blocks. There was going to be a push to go back to some type of a gold standard, which to us is a euphemism for just an asset-backed currency system. And that the people who had made that possible by not only having the foresight to invest in this technology before, the people had done the homework, done the research, figured it out, and had made the investment. But in addition, at this time, they had held for 9 months while, having basically a lawsuit filed against them by the federal government. So you had kind of, the movie Shawshank Redemption, where he crawls through the tunnel and the filth and all that stuff. And, Morgan Freeman says, I can't even imagine the stuff that these people had the stuff he went through to get out the other side and be free. We view the people who have lived through this as going through a very similar type of crucible process, and they should be compensated for that. So that's what really those elements were about. The price, we had a lot of information about, we had information that there were deals that were being done off ledger that were far in excess of what the market value is, okay? Number one. Number two, we had information that, sorry, lost my train of thought there. There was a limit, there was less actual retail holders of XRP than we are led to believe by the market cap and the float in XRP. So we believe at that time, and we believe it might be less now, that only somewhere between 0.5% and 2% of the whole 100 billion is actually held by retail, and that the vast majority is already held by central banks, large commercial banks, hedge funds, very large financial institutions that are preparing to use it after whatever is supposed to occur occurs, the event. So it wasn't, people were very quick to say, oh, the 37.5 or 25,000 times, 48 billion. That's like this eye popping. It is eye popping, even at 2 billion. It's quite eye popping. But we didn't think that was that's what the transaction would be. We thought the transaction was going to be somewhere in the neighborhood of no more than about $50 trillion, which will be the largest M&A transaction ever to occur in the history of the world that we're aware of.
Are you down with OTC? Please like, subscribe, and click the bell to be notified when the next video drops.